Howdy, howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and U.S. economy space. And as you guys can tell from today's title, we'll be going over some levels to pay attention to for Bitcoin after this major run-up it's had. And if you guys enjoyed today's video, go ahead and drop a like and subscribe. That way you can stay up to date with all of my most recent videos. But let's go ahead and jump into the content for y'all today. We're going to go ahead and start with the CBBI. As you guys can tell, there isn't anything changing from the previous video. We are still at 18, so let's go ahead and go to that coin market cap. And you see here we are still above that $1 trillion market cap, but we are flirting with it ever so slightly. With that total market cap on the TradingView version hovering so close to that $1 trillion mark, as well as Bitcoin dominance is still staying roughly around the same area as it was prior. And if you look, we are experiencing a slight pullback from the absolute peak of that initial run-up. And as you can see here, that the USDC coin, or the USD coin, has finally repegged back to its 1-to-1 value, with Tether coming back down from that run-up of $1.03 that it had. So it does look like the stable coins are finally going back to their pegged value of $1. But let's go ahead and jump into the charts, because that is where we will be spending most of our time today. And we're going to go ahead and start just with the volume profile index. Not hour. We're going to start with the volume profile index on the weekly or the daily. And as you guys can see here, we are right above the peak of our last zone. And if you guys are familiar with how I kind of view the volume profile index or the volume profile fixed range, is Bitcoin likes to gravitate towards the peak of the areas, and whenever there is an empty gap, it typically shoots up through that. So as you guys can see here, we are approaching an empty level all the way up until 29, which would be that previous consolidation range we had before the 3 arrows and Celsius collapse. So I think that is an important level to be paying attention to, because we are also back into this uptrending range. Also could be seen as a megaphone. We ultimately dropped out of it and then shot right back up to the very peak resistance point of it. So this is also an important range to pay attention to just in the upcoming weeks. So why is it important to pay attention to this? Because when we shoot up through and form a new consolidation, you can kind of use these little peaks as price magnets of where Bitcoin will head. So whenever you are looking at entry points, it could be good to pay attention to this price, the price volume. Also, what I'm going to go ahead and show y'all is on the moving averages, we did have some interesting price action. So just on the daily chart, y'all notice we did have that golden cross, and if you guys remember in this video, I did mention that whenever a golden cross does happen in the short term, we do typically see some price action. So if y'all want to go ahead and check out this video, you can see here it was posted about a month ago, and I will link it in the description. But we actually did, right when we had that correction downward, we had a nice correction of roughly 18%, which we did call. So make sure you are subscribed so you can keep up to date with all of those little tips we have, playing off of moving averages and the volume index. And we actually came down and used the 200-day moving average as a nice little support, which we actually called in this video with the 200-week moving average and the 200-day moving average. We said that that 200-day moving average could be resistance for us, causing us to have that initial break downwards, as well as the 200-day moving average to be where we ultimately find support. Because once we did ultimately just crash through these moving averages, I did preach that we were either going to consolidate or move down towards one of them, and as you can see here, we ultimately did both of that with using the 50-day moving average as support for a brief time before crashing down to the 200-day, and then, as you can see, lifting up. So let's go ahead and jump over to the weekly chart for y'all, because I think that's where we can see some interesting things playing out. Because before I was recording this video, I was actually going to mention how we broke through the 200-day moving average, which I was anticipating us to see a lot of resistance as, which this is the exact point of the recording of this video, as you can see. So we did ultimately have this as resistance, and we came back down and we went and we filled that CME gap that we were paying close attention to in previous videos. So that is why I have mentioned that I think we could be going up to 30,000 before seeing another correction. So let's go back over to just that weekly chart. And as y'all see, we actually crashed through it for a short period of time, but when we did retest it, it actually did break bearish. So we could see a retest of the 50-week moving average before trying to retest the 200-week again. And you can see here that the 50-week moving average is that yellow line, and we were actually using that as resistance all the way down to the CME gap. And then once we kind of got pinched between that CME gap and just the resistance of the 50-day, we bounced all the way up to the 200-week moving average. So subscribe, that way you can kind of stay up to date with my little TA to see some good entry points, because we definitely called this from the beginning, which is why I think there will be a nice resistance area in this CME gap area, because we will be ultimately filling this before, I think, it's just kind of how Bitcoin's history goes. They ultimately always fills the CME gaps, as you can see right here, just in the previous markets. So we definitely look to fill these two gaps moving forward and going up. Now once we do fill that gap, I do think we could see another correction downward, and that is just my opinion, because in previous markets you can see that the local high during the consolidation range did go up to where a thick candle was. So kind of some thick candlestick regions are around the 35K area, which is kind of where that last CME gap is. So ultimately, I think we could go all the way up to roughly around this 35K area before we see that correction of roughly 30% that we kind of see in these consolidation periods, or 40%. I won't go ahead and take this because this was due to a black swan event of just, some of the health problems that went on during 2020. But once we go up to here, and we see that correction downwards, it could take us all the way down to 17 again. But with the market maturing, I don't think you'll see a pullback that steep. You could possibly see a pullback all the way to that previous range of around 18 to 21. So that's kind of some levels that I'm looking at going forward, just based off of the history of the last bull run and consolidation periods, as well as just with some of the moving averages and CME gaps. Also, just kind of where we possibly could go in the near future and what kind of sparked this initial run up. Y'all have seen me do this before with the Dixie and putting it on a price scale. So as y'all can see here, we've had actually a kind of a decline in the dollar currency index over the last, week or two. Here, let's go on a lower time frame so you can kind of see it on a better picture. You've noticed during the time of the run up for Bitcoin, we did have a nice collapse downwards, and as y'all know, with the dollar currency index, it is an inverse relationship with Bitcoin. Whenever you see the Dixie go up, typically you see Bitcoin go down. Whenever you see the Dixie go down, you typically see Bitcoin go up. And you can just kind of see that throughout its history. As we were going down during the run-up, Bitcoin spiked, and then as we started going into this consolidation period, or as we were going into the bear market, you could see the Dixie starting to incline again. So that's why it is important to pay attention to just that dollar currency index, and I think that's why we are still kind of destined to go up a little bit longer. Now, I do want to go ahead and close out today's video with some of the looking into Bitcoin's graph, because I thought this was an interesting one, and this is just addresses holding X Bitcoin by a certain year. And I thought it was interesting because, as you can see, during the bear market, we didn't actually lose any investors. The adoption didn't slow down. It actually increased quite a bit. You can see we have gained roughly 2.5 million users since the collapse of people just owning 0.01 Bitcoin. And alone with people owning one full Bitcoin, we have gone up around 140k, 150k people, or just wallets and addresses. So this could be multiple people, or just multiple addresses held by one person, but it's still a substantial change to the upside, because you can definitely see that there's no sight of it slowing down. It's looking like a crypto graph. It's exponentially getting higher. So I just wanted to show you all this for the adoption scenario. Don't think that it's slowing down by any means. Also, I still do personally think you are early learning about it right now. I still think that it is a great opportunity to get in and learn about the digital asset and cryptocurrency space. And then just one last graph for y'all I thought would be interesting is Bitcoin profitable days. So this graph just highlights whenever you bought Bitcoin, or if you bought it on a certain day, would you be profitable or not? You'd be profitable by that green line, and red, not so much. And as you can see here, 88.3% of the days that Bitcoin's been around, if you bought it on one of those days, you'd be in profit right now. So I don't think there's many assets out there that can actually say that. It's a very interesting stat that I thought I would share with y'all just through my research. So if you guys enjoyed today's video and are paying attention to some of those levels that I showed y'all with the 17.5, 18.5, 21.5, as well as us peaking out at around 30 to 35 during this consolidation period, definitely drop a like below. I do just want to remind y'all that this isn't financial advice, and there's no guarantee the price is going there. This is just kind of what I'm paying attention to and kind of what I'm looking for whenever I'm going to take some profits, and then possibly whenever I'm going to add some more to my DCA. But I hope y'all guys enjoyed. Stay safe out there. Bye-bye.